Hello and welcome to the Spark Accounting Solutions Show. I'm Jenny Q, your host, and I am joined today by Julie Babcock-Hyde, founder, CEO of Spark Accounting Solutions, CPA, CFM, QuickBooks Pro Advisor, and Profit First Professional. And that's just barely scratching the surface. Hi, Julie. How are you today?
Good. I will say this. I am hot. It's hot outside, which means it is summertime,
It is summertime.
which means it's also the middle of the year.
It is the middle of the year, which is exactly why we are going to be talking about 5 must-dos for a mid-year financial check-in. And this is a lot of information. So as you're watching this, if you get overwhelmed, it's okay. We've got a solution for you at the end. So,
Yes.
Julie, let's just jump right into it.
So the first thing that I want people to look at when they're kind of doing a mid-year check-in, this is your chance, 6 months of the year have gone by just about. This is your chance to say, what do I need to do the second 6 months so that I meet my financial goals for this year? So most small businesses do a forecasted profit and loss. And I shouldn't even say most. Some small businesses do this. All small businesses should do this, because if you don't know where you want to go, you don't even know if you got there or not. So it gives you a roadmap. But mid-year, you want to stop and you want to look at how your actuals are compared to what your forecast was for the first half of the year. You're going to look at your profit and loss. You're going to compare your sales. You're going to look at your expenses. You're going to look at your net income and really do an evaluation if you're on track or not. Now, if you are on track, that's great. Keep doing what you're doing if you know what it was that got you those results. If you're not sure, you need to go back and really look and say, what did we do to get where we are? If your sales are not quite where you wanted them to be, take a minute to step back and say, okay, what did we do? What did we not do? If your expenses are too high, see where you can cut. If your expenses are too low, that might be good or it might be bad.
Wait a minute.
I know, that's crazy talk, right? Let's say your sales are not where they need to be, but your advertising and marketing budget is under budget. They might be related.
Mm-hmm.
Another thing that could happen is, like, if your payroll is under budget, it might not be because it should be. You might be really stretching your current team and need to hire somebody. So really think about both positive and negative variances, because just because something costs less than you originally anticipated doesn't mean that's a good thing. A lot of times it is, but not always.
That's really, really a good kind of different spin to way to think of things.
Yeah. And so when we get done with this first step, which is really just kind of looking at your P&L, the next thing I want you to do is go to number 2 and look at what actions did you have planned for the year to help you get the results that you want. And this is a mistake I see a lot of small businesses make. They're like, okay, I want to go from 500,000 to 750,000 revenue this year. But they don't really go back and figure out what actions do they need to take to get to that additional revenue for the year. And so go back and look at those actions. If your sales aren't where they need to be, did you generate enough leads? Did you close the percentage of deals you thought you were going to close? Was the average sale, half of what you thought it was going to be? Look at all of those factors and make sure that you're doing the activities that are going to generate the results that you want.
Oh, are you going to number 3?
No, I wasn't yet.
Go ahead.
I was just going to say, now, one of the things you may find is that what you originally had planned didn't get you the results you wanted. And so this is your chance to step back and say, okay, so I'm in this networking group. I go every week. I'm doing this stuff, but I've only gotten 1 referral all year, and I thought I would get 12. Is this the right
sounds so familiar.
Yeah. Is this the right networking group? Am I networking with the wrong people? Am
Right.
I, I'm paying all this for advertising, but I'm not getting any leads off my website? Is this where I should be investing my money? Or are there different actions I need to take to generate the results that I want to get? It's great to have this number in mind that you want to get to, but you can't control that number. You can control how many leads you generate. You can control how much you spend on marketing. You can control where you're doing your marketing. You can control somewhat your close rate. If your close rate's really low, maybe you need sales training. Maybe somebody on your team needs sales training. Look at what's working and what's not working and specific actions that you can actually control, and switch them up if you need to, and make a new plan for the second half of the year if what you did the first half of the year didn't work. If you just didn't do your plan, then you can just implement.
Right. And I do want to say this, like, just listening to you talk about all this, I'm like, I knew the topic, of course, mid-year financial check-in, but it's not until I hear you talking about it, I'm like going, is anybody else surprised that we're halfway through the year already? Like, I'm like, what just happened? How did that go so fast? And I think it would be probably common. You would know better, but I think it'd be common for small business owners to be feeling the same way. With I had all these plans and goals, and here we are halfway through the year. And I don't know if it's different this year coming out of a pandemic, or if this is just typical every year for business owners.
I think there are definitely some differences and some challenges, and like some pandemic fatigue from people of just like, oh, there's been so much this last year and a half. Can I just sit and coast for a second and catch my breath?
Yep.
And yes, you can. But if you have these financial goals that you want to hit, figuring out what are those actions that I can reasonably take with my energy level that we can reasonably accomplish as a team. Remember
Yeah.
that you probably have a team that can help out with these things so that you're not feeling like it's all falling on you. But yeah, it's this year. This year has gone fast. Last year was crazy. This year's gone fast.
Yeah.
Um, and it just feels like every year goes faster all the time. But
Well, and that's why it's so good you're doing this, because not only was it the pandemic fatigue and all of the things associated with that, then all of a sudden the country opened back up and people are like, oh my gosh, I get to go travel, I get to go do this, I get to, and so I think it probably impacted it. Let's go on to number 3.
so for number 3, this is something that a lot of small business owners don't do, is look at their balance sheet. And so when I'm talking about looking at your balance sheet, I want you to look at the assets you own and the liabilities you owe. And the difference between those two, we're kind of calling net worth for this conversation. That's not exactly totally true, but for what we're looking at right now, that's what we're going to call it. And what I want you to look and see is, has your net worth grown? Are your assets minus your liabilities more than they were 6 months ago, a year ago? Are you growing your net worth? Or are you using up your assets and getting more liabilities and kind of getting upside down? A lot of people never look at their balance sheet. Never ever look at their balance sheet. They don't know what it is. They don't know how to read it. And so the secret sauce to the balance sheet is the top half is what you own. That's your assets. That's your bank account balances. That's your accounts receivable. That's your inventory. That's all of your equipment. That's the top part. And then the middle part is who you owe money to. Do you owe payroll taxes? Do you have truck loans out? Do you have credit card balances? That's what you owe. And then the difference between those two is the bottom section, which is just equity. That's kind of the net worth on a book basis of what your business is worth. And we want that to be going up. We want your cash balances to be increasing. We want your liabilities to be getting paid down, because we want you to be experiencing cash flow positivity.
I love it. And again, I just want to interject here. This sounds overwhelming, but we have a solution at the end. So don't get overwhelmed. Like, this feels like a lot, You make it sound so easy, Julie. Like you're like, this is just all you have to do. People who aren't who don't play with numbers for a living are like, at least for myself, I'm
Yes.
like, I don't know what you're saying. So okay, are we
Yes.
ready to move on to number 4?
We are ready to move on to number
Perfect.
4.
And confession, when I first saw this, I thought augmented reality. I don't think that's what you're talking about.
Oh, you virtual reality silly people. No, we're talking about accounts receivable right now. One of the things I like people to look at mid-year is if there's changes in cash flow. A lot of our clients sell services and collect later. And so I want you to look at your accounts receivable. I want you to make sure that collections are still coming in, that you don't have things that are seriously overdue, and that there aren't really any trends in how quickly you're getting paid. If you used to get paid in 15 days and suddenly you're getting paid in 30 days, that's going to create a change in your cash flow reality that you need to account for. If you have to give your customers 15 more days of float to pay, that's 15 less days of money that you've got that you somehow have to adjust for because you still have team members to pay, you still have inventory to buy, you still have loan payments to make on your equipment, and you still need to make sure you have a plan for that. So I like people to look at this for 2 reasons. One is look and see who still owes you money that's overdue and make sure that those are getting followed up on. And then two, really looking to see if there's any kind of change in the trend of the way your customers are paying so that you can account for that with your cash flow forecasting and really figure out where things are at.
Again, it sounds so simple when you say it.
Well, the nice thing is with most accounting systems, there is a report called the Accounts Receivable Aging Report.
Okay.
And you're able to see, okay, here's all the people that are 90 days overdue. Those are the people you start with. Here's all the people that are 60 days overdue. Here's all the people that are
Okay,
30 days
perfect.
overdue so that you can actually see who's in what bucket, how old their stuff is, and remember that the further people get to the right of that report, which means the older their receivables are, the
Yeah,
less likely you are to collect. So the sooner you
there
can
it is.
follow up. So
Yeah,
we're doing this mid-year, but this is probably something you should do, be looking at that aging report monthly and having somebody follow up on it.
that makes total
But
sense.
in mid-year, we're looking at for kind of not just to follow up on things, but also to see if we're like, do we have a change in how people are paying us?
Awesome. Makes total sense. Okay. And here we come to number 5.
Number 5, this is your opportunity to, so far we've looked backwards. Now's our chance to look forward and say, okay, this is what this is what we said we were going to do for the first half of the year. Right now, this is what we're saying we're going to do for the second half of the year. Is that still my goal? Is that still what I want to do? And do I still have the right actions identified that I need to take to get there? It's not enough to say I want to grow my revenue 200,000. That's great, but the next question needs to be, how am I going to get there? And so it's great to have these number goals. And a lot of people stop at these number goals. I'm going to have 10% growth this year. I'm going to have 20% growth this year. Well, how? How are you going to do that?
Right.
And
Right.
so it's really important to turn those numbers into action items. Now, you may have already met your sales goal the first half of the year because you've had such a great year. So, are you going to just sit around the second half of the year? Maybe you are. Maybe you're not. But you got to figure out and reevaluate, okay, this is where I am now. I thought I was going to double my sales, but I'm only seeing, 50% growth instead of 100% growth. So, what's my target for the second half of the year? Do I want to go back to doubling? Do I want to stick with this intention to double my sales? And if that's the case, what do I need to change? Or is there a different reality going on here that I need to modify my expectations for the year, up or down? Do I need to change my projections for expenses? Maybe you've grown so much that you need a new truck. You need to figure that into your forecast now. Maybe you've grown so much that your tax liability is going to go up, and you need to factor that into your plan and have money set aside for taxes. So you really need to think through all of that stuff and say, where do I want to end the year and what actions do I need to take to get there?
Perfect. And this is the place where we offer help, because this was a lot of information. And when you're busy building a business, you often don't have time to slow down and figure this all out. So, Julie, you're offering.
It's very true. So
Yeah.
what I would encourage everybody to think about is like, who, if this isn't your forte, who do you have in your world that can help you with this? And if you don't have somebody in your world that can help you with this, I'd invite you to just reach out to us to do a discovery call and just talk about, what you need, and if there is an opportunity for us to help you with this process. Some people do this themselves. Some people already have accounting professionals that can help them, but some people, when they think about who's the person that we can turn to, have a hole there. And that's something I would invite you, if you have that hole and want to talk about it, to reach out.
Perfect. And you can reach out by going to easy for me to say, sparkaccountingsolutions.com, right there at the bottom of your screen. Or if you're on Facebook, just click the contact us button.
Perfect. Yep.
Yeah. Awesome. Thank you, Julie. Thank you for helping getting all of us business owners either back on track, on the right track, or continuing forward.
Exactly. And here's to a good rest of 2021.
Absolutely. All right. Thank you guys so much for watching, and don't hesitate to reach out if you have any questions or post them in the comments. Have a great rest of the day.